What if I told you the very trade wars, rising tariffs, and chaotic global markets that are scaring investors could be your golden ticket to making real money from home? While others panic and pull out of the market, the smart ones, the strategic thinkers, are quietly making thousands, sometimes tens of thousands, by understanding one simple truth: volatility creates opportunity. In today's video, I'll show you how to read between the lines of global trade news and transform it into a money-making strategy right from your laptop. We're going to dive deep into how tariffs and tensions between the US and its trade partners are shaking up the stock market, and how you can ride those waves instead of getting drowned by them. I'm going to break down the actionable steps you can take today, from identifying the right sectors to invest in, to using online trading platforms, ETFs and global diversification, to capitalize on this economic moment. Stick with me until the end, because I'm going to reveal one specific market sector that is exploding due to current trade tensions, and how even a small investment there could multiply your money in months. Let's get into it. Every time you turn on the news, you hear about tariffs being slapped on steel, semiconductors, electric vehicles, or rare earth minerals. You hear about US tensions with China, the European Union, Mexico, and beyond. And while these headlines might seem overwhelming or political, they actually signal market inefficiencies. And where there's inefficiency, there's profit potential. Here's how it works. When tariffs are imposed, it raises costs for certain industries and reduces profit margins. Investors, in a knee-jerk reaction, often sell off stocks in affected sectors. But here's the catch: these reactions are often overblown. While some companies suffer, others benefit enormously. Think about domestic producers who no longer have to compete with cheap imports. Think about logistics firms, alternative suppliers, and even currency plays that emerge in the aftermath of every trade decision. You're not trading the news, you're trading the reaction to the news. That's where money is made. When tariffs are announced on imports from China, investors often panic and sell off technology or manufacturing stocks that rely on Chinese supply chains. But here's what savvy traders do. They look at American companies who produce the same goods domestically. If Chinese semiconductors become more expensive due to tariffs, investors can shift their focus to US firms that manufacture those same chips. These companies often experience a spike in demand and stock price. Let's take a real-world example. When the US imposed tariffs on solar panel components, Chinese solar companies took a hit. But US-based manufacturers like First Solar saw their share price surge. The smart money flowed into companies that stood to benefit from that protectionism. So, your job as a home trader is simple. Follow the tariffs, then follow the money. Ask yourself, who is losing market share because of these tariffs? And more importantly, who is gaining it? If you've been watching the markets lately, you've probably noticed something. Individual stock picking can be intimidating. Unless you're spending hours each day researching earnings reports, watching geopolitical developments, and analysing supply chain news, it's easy to get burned. That's where ETFs, exchange-traded funds, become your best friend, especially when it comes to capitalising on global trade shifts and tariffs. ETFs are like bundles of stocks grouped by sector, theme, or region. Think of them as investing in the big picture instead of putting all your eggs in one basket. And when tariffs are announced, the big picture can move fast. Let's say there's a sudden spike in tariffs on imported computer chips from Taiwan. Instead of trying to guess which single chip maker will benefit, you could invest in a semiconductor-focused ETF like SOXX or SMH. These ETFs include multiple chip companies: Intel, Nvidia, AMD, and others, so you're covering the entire industry. That way, even if one company misses earnings, the others can still carry the performance of the fund upward. It's diversified, lower risk, and still captures the upside of the trend. Another powerful move is tracking sector-specific ETFs tied to industries that are highly reactive to global trade changes. These include XLI, industrial sector; XLE, energy sector; IYT, transportation; and ITA, aerospace and defense. When geopolitical tensions rise, say between the US and Iran, or China and Taiwan, defense stocks tend to surge. You might not want to bet on a single military contractor, but with an ETF like ITA, you can benefit from the entire defense sector's rally. And here's where it gets even better. You don't need thousands of dollars to get started. Most online brokerages today allow you to buy fractional shares of ETFs. That means with just $50 or $100, you can own a piece of a fund that tracks a fast-moving sector. It's perfect for beginners who want in on the action without betting the farm. Timing is key. When a major trade decision is announced, you'll often see a brief window, sometimes only a few hours, where ETF volume surges and prices spike. If you've already set alerts or watch lists, you can act quickly, buying in before the broader market reacts. It's not about gambling, it's about being informed and prepared. Finally, don't overlook international ETFs. If trade tensions between the US and China cause a shift in production to India or Mexico, ETFs like India, EWW, Mexico, or VNM, Vietnam, can give you direct exposure to those emerging winners. While international investing may seem advanced, these ETFs trade just like regular stocks and are available on platforms like Robinhood, Fidelity, and Webull. Bottom line, ETFs are your low-risk, high-leverage entry point into global trade trends. They let you move fast, stay diversified, and profit from major macroeconomic shifts without needing to master individual stock research. If you want to take your money-making strategy one level deeper, here's a secret that many everyday investors overlook: currency trading, also known as Forex. It's often seen as the playground of hedge funds and full-time traders, but that's simply not true anymore. Thanks to modern platforms and lower entry requirements, trading currency pairs is now something you can do right from your phone, and it can be a direct way to profit from the fallout of tariffs and trade wars. Here's why. When countries get into trade disputes, their currencies often move fast, and in opposite directions. Let's take the US and China as an example. If the US announces tariffs on Chinese goods, the Chinese yuan might weaken as a result. Why? Because tariffs can reduce demand for Chinese exports, hurting their economy and making investors pull money out. At the same time, the US dollar might strengthen as investors rush into the perceived safety of American assets. Now, if you were trading the USD/CNY pair, meaning the US dollar versus the Chinese yuan, you could make money just by predicting that the dollar will rise and the yuan will fall. These trades don't rely on huge price moves. In fact, just a small movement, say a 0.5% shift, can translate to meaningful profit, because currency trades are often done with leverage. With proper risk controls, that leverage can work in your favour. You don't need to be an expert in foreign policy or have a degree in economics to do this. What you need is the ability to follow the news, spot patterns, and act fast. Platforms like Forex.com, eToro, and OANDA allow you to open accounts in minutes and start trading major currency pairs with as little as $50 or $100. They offer real-time charts, trend analysis tools, and built-in risk management features like stop-loss orders. And unlike the stock market, the Forex market is open 24 hours a day, 5 days a week. That's a huge advantage if you're working a 9-to-5 job or trading around your family's schedule. You can literally trade currencies in the evening after dinner or early in the morning with your coffee. Beyond major currencies like USD/EUR or USD/CNY, you can also trade commodity currencies like the Australian dollar or Canadian dollar, which are tied closely to global resources like oil and minerals. If tariffs are placed on energy exports, these currencies can swing dramatically. By tracking these relationships, you can position your trades to profit from global commodity price shifts too. Lastly, let's talk strategy. If you're just getting started, begin by paper trading on a demo account. These simulated accounts let you test out trades with fake money until you get comfortable. Once you see consistent results, go live with small amounts. The goal isn't to gamble, it's to use your understanding of global news to make informed decisions with manageable risk. Trading currencies may sound like a big leap, but in today's world, it's one of the most direct, flexible, and exciting ways to turn global chaos into consistent income from the comfort of your home. When trade wars erupt, companies don't just sit back and take losses, they adapt. One of the biggest trends happening right now is the realignment of global supply chains. Firms are moving out of China and diversifying into Southeast Asia, Mexico, and India to avoid US tariffs. This shift is creating new winners across the board. For instance, Indian manufacturing companies are seeing major growth as Western firms move operations there. Vietnamese logistics companies are booming as exports reroute through their ports. Mexican industrial real estate is on fire as factories relocate south of the US border. You can invest in this shift by researching international ETFs or even US-listed companies that do heavy business in these regions. For example, look into ETFs like INDIA for India, VNM for Vietnam, or EWW for Mexico. These funds are structured specifically to give you exposure to countries benefiting from the ongoing supply chain reshuffle. If you're willing to go one level deeper, look into US firms that are expanding aggressively into those regions. Logistics firms, shipping companies, port operators, and construction firms. Thanks to AI and real-time news scanning tools, you no longer need to spend hours poring through economic reports. Platforms like Koifin, Seeking Alpha, and TradingView now offer customizable news feeds, alerts and market sentiment indicators. Even free tools like Google Alerts and X, formerly Twitter, can give you an edge if you know what to watch for. Set alerts for key phrases like tariffs on, supply chain disruption, trade war, and export ban. Every time one of these phrases hits the news cycle, ask yourself two questions. Which companies are affected negatively, and which ones will benefit? Then, use that insight to quickly get in and out of trades using commission-free brokers. Most platforms allow you to buy fractional shares, so there's literally no excuse not to act. Whether you're working a full-time job or trading part-time, this strategy is 100% doable from home, and you'll be reacting faster than 95% of casual investors. You already know how to invest in the opportunities created by global trade shifts, but let's take it a step further. What if you could build multiple income streams around this knowledge and turn it into a full-time business? The truth is, people are hungry for economic clarity. They want to know how global news impacts their wallets, and most mainstream media just confuses them. This opens the door for you to position yourself as a go-to resource, even anonymously. Start by creating a Substack newsletter or monetized blog focused on trade trends and market moves. You don't need to be an expert, just someone who simplifies the headlines and shows how people can react financially. Share ETF ideas, sector movement insights, and country-specific trends in easy language. Once you build an audience, you can monetize through paid subscriptions, affiliate links, and sponsored content. Next, consider starting a Faceless YouTube channel, just like this one. Use tools like Pictory.ai, 11 Labs for voiceovers, and ChatGPT for script writing to crank out 3 to 5 minute videos breaking down daily market shift, government announcements, or hot ETF moves. Focus your titles on SEO keywords like best ETFs during trade war, how tariffs affect stocks, or 2025 trade tensions explained. Use trending news to fuel your content pipeline. Then there's the digital product angle. Package your knowledge into downloadable ebooks, sector watch lists, or monthly trade trend reports using platforms like Gumroad or Podia. You can even create a course on Teachable showing beginners how to profit from tariffs and global trade events using ETFs and fractional shares. These products run on autopilot once built and can generate income 24/7. Want to keep it even simpler? Record short-form TikTok videos summarizing trade war impacts in 30 seconds, link to your affiliate investing app, and collect commissions from every new user that signs up. Apps like Webull, Robinhood, and Public offer up to $100 plus per referral. The best part is, these income streams build on each other. Someone might find your TikTok video, subscribe to your newsletter, buy your product, and eventually become a high-value follower for years to come. All because you learned how to interpret the trade news everyone else ignored. If you're looking for one red-hot sector to keep your eye on right now, one that's been supercharged by tariffs, trade tensions, and supply chain shifts, look no further than domestic manufacturing and reshoring. This trend isn't speculation. It's happening right now. The US government is pouring hundreds of billions into reviving domestic production of semiconductors, rare earth minerals, energy infrastructure, and defense equipment. This is partly due to national security concerns, but also because of rising tensions with countries like China, Iran, and Russia. For example, the CHIPS and Science Act passed in the US has committed $280 billion to the semiconductor industry. This has created a gold rush for companies like Intel, Micron, and Applied Materials, which are now expanding domestic production facilities and hiring thousands of workers. These companies stand to receive massive subsidies, tax breaks, and long-term government contracts, guaranteed revenue streams that make them very attractive to investors. You can gain exposure to this trend with ETFs like SOXX, which tracks the semiconductor industry, or XLI, which covers industrial companies tied to reshoring efforts. You can also look at lesser-known plays like MP Materials, which is developing rare earth mines in the US, reducing dependency on Chinese imports. Defense is also seeing a huge boost. As the US ramps up military readiness, firms like Raytheon, Northrop Grumman, and General Dynamics are getting flooded with new orders. These companies are building advanced systems, ships, and technologies to meet rising global threats. And once again, the stock market reflects these contracts. Even industrial REITs are winning big. As companies relocate manufacturing back to the US, they need space. Massive warehouses, fulfillment centers, and logistics hubs. REITs like Prologis and Americold are in prime position to cash in. And here's the kicker. This is not a short-term trend. Reshoring is expected to last well into the 2030s as the global economy continues to fragment and nations focus on economic independence. That means this sector offers not just short-term gains, but long-term wealth-building potential. If you're looking to get in early, now's the time. Start tracking these reshoring trends, add key players to your watch list, and consider dollar-cost averaging into sector ETFs over time. Because when the government and the market move in the same direction, the upside can be massive. And that's exactly what we're seeing right now. So what have we learned today? The world might be in economic chaos, but that's exactly where opportunity lives. Tariffs, trade wars, and market shifts don't have to be scary. In fact, they can be your ticket to financial independence if you know how to read the signs. You now have the roadmap. Follow the news, identify who benefits, use ETFs for exposure, play the currency market, track supply chain changes, and monetize your knowledge across multiple platforms. It doesn't matter where you start. What matters is that you do. And if you found this video helpful, don't forget to like, subscribe, and comment below. I'm ready to trade smarter. Let me know which sectors you're watching, and I'll reply with my latest insights. Your laptop could be your new trading floor. The only question is, are you ready to cash in?